Happy Tuesday, everyone. Rich Swerbinsky with the Mortgage Collaborative here once again with the last week in Mortgage Today, where we run through the week that was in the never dull mortgage industry. Each week, really pleased to be joined by one of our lender members as my co-host. And this week, back in the co-pilot seat, the president of CLM Mortgage, Sandra McDowell. Sandra, great to see you.
Thanks so much. Happy to be here, Rich.
And I want to get into CLM a little bit and give you a little overview of the company, just to baseline with our members. But first off, you guys are based out of Houston. You guys got to be going nuts with the World Series. Little rain out last night and back at it tonight. So
yeah, you go out my door and look at the cubicles. It's a sea of orange.
See,
Astro orange.
They got a hell of a team. It's should be an exciting series. They've been the best team all year. Philly kind of limped in, and it should be exciting. As a big baseball fan, I'm looking forward to seeing how it plays out.
Yeah, it's going to be an exciting week.
Very cool. All right, let's go ahead and get into it. And as always, any comments, questions, thoughts, anything that anybody has to contribute to the show, please just feel free to do so in the chat or the Q&A, and we will incorporate it into the show. For those of you listening on podcast, where the majority of you consume the show, I got to do a better job mentioning it at the beginning. Join our live broadcast every Tuesday at 2 p.m. Eastern. Go to mortgagecollaborative.com. You can register there. So Sandra, if you could start CLM Mortgage. You guys are unique in some ways, and I would love if you just kind of give an overview of the organization before we get into the discussion.
Sure. We are CLM Mortgage. We're actually owned by a home builder by the name of Chesmar Homes. We are in we're in all of the big markets in Texas. We have three offices in Houston, one in San Antonio, one in what we call Central Texas, one in Austin, and also one in Dallas. We are a little unique than most builder-owned mortgage companies because we do retail outside of Chesmar. Last year, 30% of our business was business outside of Chesmar. Other home builders resell homes, some refis. So we're a little bit different, but that kind of sums us up.
Cool. And I'm eager to get your thoughts and takes on the home builder side of our business. We'll get into that a little bit later in the show, but just been a big topic of interest with our members. Obviously, inventory being a big issue, and we've had the National Association of Home Builders CEO Jerry Howard speak at our last couple of conferences. So I'm like, we got to get Sandra back on as co-host. Always love getting your perspective, and we'll do that. Let's start though. The news of the week: the Federal Reserve, as they have been for the better part of the last year, in the headlines as they start today their most recent 2-day policy meeting that will conclude tomorrow afternoon with establishment of the new federal funds rate, largely expected to be increased by 75 basis points from the current level. And I don't think there's going to be any deviation for that. More importantly, obviously, all of us that are interested market watchers, looking for changes in the Fed's tone, their stance, any little tiny deviations in their language at all is immediately scrutinized the second Mr. Powell gets done speaking, and then the subsequent press conference. And if you look at the Fed's dilemma, I'm talking about it, right? They're trying to stick the landing. Inflation is broiling and much higher than is healthy. And they're trying to tamp that down through rate increases. Have been some positive signs. The last two inflation numbers we got were less hot than expected after a trend of the opposite. But then this morning we got the JOLTS report, which is an employment report, basically showing total job openings created month over month. And it's a little backward looking. This was from September JOLTS report, but was better for the labor market than expected. The employers keep hiring, keep opening jobs. So in it, all of that long-winded way of kind of laying out the Fed's dilemma right now is they're starting to get some data that indicates that what they're doing is working, but then you're kind of getting conflicting data. So, man, we have a really hot, people are still spending money, employers are still hiring. So kind of a quandary the Fed has. And as the president of a mortgage company, I'm just interested in your perspective.
Well, I mean, there's no question we've been on a wild ride this year on watching the market, right? I mean, even Monday or yesterday was kind of a wild ride in the bond market. I think it is a challenge. They raise too high, it could truly hurt the economy. And if you don't raise enough, we're still going to stay in this possible recession. Um, Everybody's predicting it to rise through, 3/4 of a point tomorrow. Um, which hopefully that is the case. At some point in time, they had talked about 1.25. So hopefully, though, we are seeing a little bit of maybe a little bit of a change. Speaking of a home builder, one of the problems that we've had is just supply, right? I mean, there's been several, we haven't been able to get lumber, or the cost of lumber has been so high, or I mean, we couldn't get garage doors, or we couldn't get appliances. And when we could get them, I mean, the cost of them were just crazy, which has also caused the increase in housing prices as well. We are seeing some improvement in that. So hopefully that shows a little bit of maybe, the pricing settle down settle down a little bit.
Yeah, it seems like this, you'd know better than me. Some of the supply line stuff is starting to abate a little bit, yet there are lingering issues. And, it seems like overall the problem is better. But then it seems like each week I still hear some kind of story about, oh, hey, there's a shortage on fill in the blank of this obscure thing that you'd not expect a shortage of. So not out of the woods yet. And I would imagine, obviously, some of the things going on geopolitically in Ukraine and elsewhere also is contributing to a lot of these issues here at home in America.
Oh, absolutely. And it surely is, top of mind for sure.
Yeah, and housing starting to become a little political as we get into the election season, and obviously a midterm election now, and the fate of the House and the Senate in balance. And not don't get political on the show, but we're always looking at the ways that the changing political winds can impact our industry. And if you look at in housing, right? Some of the if you have the Republicans win the House and the Senate, that obviously gives that side a lot of power. It seems like the majority of our industry leans to the right, yet a lot of the policies of the left have been more beneficial to our industry. So as we look at the midterms, I mean, the things that are kind of in play, get the CFPB, obviously, right? Whoever's president kind of controls that, but the teeth of that organization are kind of in balance. And also it's heading to the Supreme Court now that their funding source is unconstitutional. So there's that. There is, GSE reform. Democrats stay in power, are going to see nothing there. If Republicans gain power, you may start to hear more about that. Under Republican power, you're not going to have any kind of first-time home buyer tax credit or anything like that. And the one consistent, I think, regardless of what happens, I think we're going to see a reduction in FHA premiums, probably sometime or shortly after the midterms. But any thoughts on just any of the issues in housing and how the midterms could impact them?
Well, I really am encouraged and hope to see that, we do see a decrease in the FHA premiums. I think that will help in the home buying process, in a really, really tough time. I would hate to see that the first time tax credit goes away, but that is obviously a possibility. And I don't, it always comes up with Fannie and Freddie, and do they reform it? Do they not? I don't think either party. I don't want to be political, so I don't know if anything will happen there. But I think it's important for, and I think this is what's difficult for the feds, is because home ownership is very important to us all, and rising interest rate really knocks out a lot of possible homeowners. And so I think it's going to be a really tricky time over the next 12 months, whoever gets in power.
You're right. I mean, just as we've watched rates increase this year, like every time they go up a quarter, it's knocking out, a certain percentage of previously eligible borrowers just due to affordability issues. And I got to imagine your LOs and a lot of LOs all over the country, they're through a lot of the great tech and CRMs and tools that we have available to us now, like know in their head, like, hey, if seven and a quarter becomes 6.5, this pool of people becomes more in play than they were otherwise, correct?
Oh, yeah, absolutely. And I was at the MBA conference last week. And Dave Stevens, the previous president of the MBA, he really believes, by the end of next year, fourth quarter of next year, we may see a decline in rates to 5.5. And that would be fantastic. That could really not only benefit first time home buyers, but also benefit business for refinances of people who bought it 7.5.
Absolutely. You got those right. I mean, every house that's going on the market right now is getting bought. It's getting gobbled up.
Yep.
Maybe a few days slower than before, but still fast. And it's a whole new wave of people, as we know in this industry, that become refinanceable. And the FHA premiums, you can just tell by the kind of the way the winds are blowing that something's coming there. And
Oh, yeah.
I've heard some 25 up front and 25 monthly. I think that would be a nice thing. To your point, every little bit helps, especially with the affordability issue we got going on right now.
Absolutely. And it would truly help those first time home buyers with, even if we've seen a huge increase in housing prices, right? So, now we're seeing them decrease, but even if they decrease, they're still up substantially in price.
Yeah, no, absolutely. So, and then the CFPB, just a lot of winds of change there with their funding source kind of coming under criticism and, really starting to get more involved now that Director Chopra has been in place for a while, trying to get him to come out to our conference in San Diego in March. Would love to hear him speak and hear firsthand. They sent their director of mortgage markets to our recent conference in Chicago, a guy by the name of Mark McCardle, and had a great session. It was just awesome. It was, it was him and Rob Krisman moderated it, and probably 60, 70 of our members in the room. It's just like open Q&A, like, how are you looking at this? How are you looking at that? And it's been the one nice thing these last few years is the leaders in our industry have been much more open to talk to lenders and to take public feedback. And you'd like to think that has had some impact on decisions, and hopefully we'll continue to.
Yeah, I think so. I mean, we saw the same thing, I've been to your conferences, which one of the things I love about your conferences is that it is just like an open, room of people just talking, an open forum for everybody to ask questions. And I think we get a lot of information that way. The MBA, we had guys there from the gal there from FHA, and I think they are absolutely looking more to the mortgage industry feedback. How do they get better? What do they need to watch? And that is absolutely refreshing.
Because when you're making regulatory changes, it's so easy for there to be unintended consequences, and 07, 08, the vast majority of regulation that was implemented as part of Dodd-Frank was absolutely needed and good for our industry. But, lumped in with that, I worked at a community bank at the time. Some of the ways that Dodd-Frank impacted small community banks that, had no impact in that. It's that, it's the broad brush. And that's why it's so important, right? If you're going to be making regulatory changes, to talk to the stakeholders involved and at least get their feedback. Noble idea, it seems like. So.
Yeah, absolutely.
So the home builder side of our business, Sandra, closer to that than most. And I think, you see, all these home builder sentiment indices, and, they're, lower than last month and low, the pick your headline, depending on how you want to frame the story. But it seems like builders, just because of the supply line issue and now the affordability issue, it is like, like back in the builders used to like build, and you're building ahead and then selling behind. And now it's like, all right, I'm gonna find like the right person and then we'll start building. Does that kind of synopsize the builder market right now?
Yeah, absolutely. I mean, the biggest thing for the home builders at this point is keeping their backlog. Some of these people that have in the backlog today started their home at 3.5, 3.75% interest rate. Because you have to remember, supply and demand, it made our build times longer, right? And so you have a buyer that started at 3.5, and now they're ending up at 7.25, 7.5 when their house is built. You have a lot of people just doing a cancellation, whether they can qualify or not. It's just not what they signed up for. So that's the biggest stress right now on home builders, is keeping people in the backlog, so they don't end up with a whole lot of inventory on the ground. That said, it's trying to find the bottom, right? I mean, yeah, home builders, the prices have gone up. Their margins have been great. You're cutting a lot of margins now, just trying to find the bottom. So I think that's another thing a lot of home builders are chasing is, where is that number? A lot of them are doing, special financing right now. And, we're doing we did a big, huge campaign with our new home consultants, because, right now we're selling payment, trying to get them to understand price doesn't really matter, because majority of people is never going to pay that mortgage off anyway, right? It's all about mortgage payment and knowing how to make it, how to figure it, knowing how to sell it. So I think all the home builders are going through pretty much the same thing. I mean, new home consultants, if you take a look and say how many people have been doing it for more than 5 years, it's not that big of a number. So none of them have sold, just a lot like our LOs, in a rising interest rate. And that is the challenge.
Any sense of how the changed and current climate for home builders maybe has affected small builders versus large builders versus like the change in this climate and some of the challenges and maybe benefits that the new climate has yielded? Any sense of how that's maybe either positively or negatively impacted either really large or really small builders?
I don't think any of it has positively affected any of them. I think the bigger builders are obviously can withstand a lot, and they have a lot of homes built, ready to be sold, and has lost a bigger part of their backlog because they just had more loans or more homes. The smaller home builders, hopefully they didn't overextend themselves and go out and build. I think, and this sounds kind of strange, but the fact that we did have a supply problem probably slowed us down in building. So hopefully that meant the small builders didn't have a whole lot of inventory sitting there. So that might have been a plus for the shortage in inventory.
And then speaking of inventory, one of the topics that, constantly comes up on this show and the one I do with Rob Chrisman is just, looking at the inventory issue problem in America more holistically and thinking about fixing it more long term, and not just, there's not many band-aid things you could do, I guess, with inventory, but and the idea that constantly comes up, and I've known and done a lot of construction business in my life, known a lot of builders, like, you just can't make money on building a home of a certain dollar figure. Yet, we do need to construct smaller, more affordable homes in America. I've said forever, the only way you're gonna change behaviors on this issue is with some sort of incentive for the builders. To make it easier for them to make money building smaller homes. Is that something that comes up at all in your interactions with your builder partner, or just in general in Texas, which is continues to grow quickly?
It does continue to grow quickly, and we're trying to find us and other home builders. I mean, you're right. Doing a first-time home buyer, small homes, there's not as much incentive. Because if your margins are 10-12%, so 10-12% of 200 is a lot less than 400, obviously. And one of the largest costs in building homes right now is land. Well, and any time is normally land. The further you go out, the cheaper the land becomes, right? But then you just have you have a vendor issue and work issue and employee issue as far as getting out there to build. So, but yeah, I mean, it's an interesting, it would be, I would think it would be great if there was some sort of an incentive to give, you know, our population the ability. We still have a huge population that are not homeowners and can't become a homeowner because, especially now, because of price and rate. So I think we're missing a segment for sure.
Yeah, and I get it. Like multifamily is the easier, like throw numbers at the problem to build apartments or condos or attached housing. It's, you can, make more affordable homes. It's cheaper, more efficiently. But at the end of the day, like if we continue on this path where we're not building any homes in America under 350, 400,000, and the ones under that price point continue to be like, just naturally dilapidated off the market when they're, knocked down or, become too old to, there's going to be a big problem. And I don't know, I just, to me, it seems like one of those issues that will get worse and worse and worse, and government will finally be like, oh crap, we have to do something bad now, as opposed to taking a look at the landscape of how things are highly likely to play out. The same way the things that are happening now, 2 years ago, we were kind of saying like it's gonna be a major problem, all these people refinancing into these rates in the twos, and once rates go the other way, nobody's going to want to move. Like, some of this stuff can be kind of predictable.
It can be. I mean, it's, my goodness, I've been through it so many different times in my lifetime. But I hope, the average sales price in Houston, Texas in general, with the exception of Austin, has been anywhere from 250 to 350 in the past. Not today. I mean, in Texas, we rose more than normal. But if you just take a look at 2008, right, or 2007, the pricing was going up like crazy. And then, Texas got back to 250 to 350. So I'm hoping some of that will happen. And the market will take care of part of that. But yeah, it's an issue for sure.
Comment in the chat from our friend John Harp: small homes equals zero builder interest. Manufactured housing / prefab homes is really the only solution on affordable new home market. Builders want immediate gratification. I don't blame them. But yeah, that's a very, I think, realistic part of the market right now. And is that anything you guys are dabbling in there down in Texas? We know the Biden administration's making it a big part of their kind of response to supply. Is that anything you're running into down there, Sandra?
No, not that I see. I mean, we've got a couple of pockets, coming up around Houston, kind of fill-in projects. But nothing from our company standpoint, we're not looking into yet, as of yet. But never say never.
Some of this stuff that is being developed now, really, it's changed my perspective on it a lot. Some of these prefabbed homes are like dropping in with cranes, or like setting them up in like 2-3 hours, and can put them on the property of an existing dwelling in a lot of cases. It's interesting stuff that you're certain to hear and see more about as we navigate into a future where housing inventory still is an issue. But I think right now, Sandra, right, it's just a little relief on rates. I mean, man, we even get down to like 6%, it would feel pretty damn good. And how many times have we been able to say, even, we've been in the industry a long time, like not many times we've been able to say 6% would feel good.
Right. Exactly.
Yeah. Just a couple minutes left. Sandra, just a couple other things. Just wanted to bring up some big news at MBA Annual last week, and not big news, I guess, stuff we knew was coming. FHFA, Sandra Thompson, while there, no specific detail yet, but said they'd be eliminating delivery fees on affordable products, and for some, minority home buyers. And flip side, increasing some fees on cash out refis. Also announced formally the acceptance of alternative credit scoring models. That's got a pretty long runway. So more of like a 2024 thing, but your thoughts on those developments?
I think they're all good. I'm a supporter of all that. I mean, I think lowering the fee for your first time home buyer, you know, and raising it on cash out makes sense to me. Um, I I like the fact, I think our credit scoring needs an overhaul anyway. I think it's gotten a little stale. We've been doing it the same way for a long time. So I'm actually excited to see how that all plays out.
Yeah, FICO has been around forever and has served the industry well. And I think part of the hesitation, just some of the inside baseball on this, has been like the market knows FICO, right? So the rates that CLM Mortgage is selling is a byproduct of the appetite for mortgage bonds in the secondary market filled with CLM mortgage loans and others. And so they obviously, credit is one of the things they're factoring when they're buying those things, and they know FICO, right? So I think that's the biggest, like, because to so many people are like, oh my God, why didn't this happen forever ago? Because, well, if you underwrite mortgage bonds to something that the people that buy them have less confidence in, then it's going to make mortgage rates higher for all Americans. So I just applaud FHFA and Sandra Thompson, the thoughtful way they've done this and sought feedback and are kind of giving this the long runway it deserves. So
Yeah, I agree. I'm excited to see what they come up with.
should be interesting. And it's been an interesting year, Sandra. We never know what to expect in this industry. And a year ago, you're probably hosting last fall this show, and we were talking about, oh my God, 2021, nobody thought it was going to be this great. Like, holy crap, this has been awesome. And now here we are a year later, the wild pendulum of the mortgage industry. Been a challenging year. Any just, parting thoughts for the audience as we get into the fourth quarter of what's been kind of a crazy year?
One thing I can say is, I've been doing this for a very, very long time. I hate to admit it, but like 40 years. And, we've seen it go up and down and up and down. I will tell you, this has probably been the fastest I've seen it ever go up in a short period of time. So I'm looking forward to, I'm hoping that this is a short little blip. I don't know that it is, but I think we have to go back to the basic, which is what I'm trying to bring all of my people to. We have to go back to the conversations with our home buyers, not just the check marks. We have to get back to absolutely identifying what their best needs are. They deserve that. And we're back to the basics. And I think, like I said, it's all about mortgage payments right now and that monthly investment. So we just kind of have to change our mind and just change the way of thinking.
Words of wisdom, one of the better closeouts I can remember in this show. And and I really appreciate you once again joining me to co-host, Sandra. Really always appreciate your insight and perspective on the industry, and appreciate your membership in TMC.
Perfect. Thanks so much for having me.
All right. To our attendees, thanks as always for spending 30 minutes your week with us. We're here every Tuesday at 2 p.m. Eastern with the last week in mortgage today. And until next Tuesday at 2, have a great rest of the week, everyone. Take care. Thanks again, Sandra.
Thank you.